Yahoo disappointed investors yesterday. Current sales forecast going to be coming in lower than forecast. It is also laying off 1% of its workforce. Hudson Square analyst Rory Maher is joining us now on the phone. Rory, thanks so much for being with us.
Thanks for having me.
So Yahoo disappointed investors, obviously. How much does this affect the way that you view the stock?
Well, I think the fourth quarter did look positive. They beat the consensus and our estimates on revenue, operating income when you adjust for some restructuring charges, and EPS. Display was strong. It grew 16%, which we believe is right in line with the industry. And clearly the first quarter guidance was weaker than we had expected, and that is being driven by some transitional hiccups related to search.
So it sounds like you don't think the miss is that big of a deal.
Well, I think given the strength in display, it's good that they're growing in line with the industry. We look at some of their Asian assets and properties, and they look very promising. With that in mind, I think you have to give them some time to make that search transition. So we're still pretty positive on the company and the stock.
What about the job cuts? I mean, they're not enormous, Rory. They're just 1%. But does this say anything to you about where Yahoo is going? I mean, is the company going to exist in its current form in 3 years, or are they just going to keep pruning and cutting and maybe even sell off a unit or two?
Well, the company said on the call that those jobs were going to be refilled, that was more of a putting resources into places where they're stronger. And, it was a small amount of layoffs. And, I would say they have a new sales guy that just came in. So I don't think that was indicative of, cutting costs to boost profits. I think that was more of a resource allocation move. So I wouldn't necessarily read that into continued chopping. I think the company I think they've done most of the cutting with the layoffs, and from here we have to let them kind of continue focusing on the turnaround.
Rory, last time you were here with us in the newsroom, you made the point that Yahoo's biggest competitor right now is Facebook. What does this mean with the kind of pruning and maybe the strategic moves that management is looking at now from inside Yahoo?
Yeah, well, clearly Facebook is a risk. They're getting brand advertising. We're saying that what we see is that it's being taken primarily from national radio, TV, and print at this time. I think you have to, now that the search transition has been pushed out a few quarters, you have to look at that a little more closely. But at this time, first quarter display guidance was in line with the industry, which tells me that Yahoo is not losing share of online display.
Rory, thanks so much. Rory Maher joining us there from Hudson Square Research.